Over the last 3 years, farmers experienced a cost squeeze due to significant increases in input costs. This placed a constraint on profitability, and if anticipated gains in South African agricultural production in 2012 materializes, it could safeguard rising profit levels for industry players over the coming year. Ernst Janovsky, head of AgriBusiness at Absa, joins us now for an agricultural outlook. Thanks so much, Ernst, for joining us this afternoon. We're putting the agricultural sector in the spotlight this afternoon, but before we throw forward in terms of what to expect from the sector moving forward, let's take a quick look at the year that was for agribusiness in South Africa. What are we looking at?
Look, if we start, the season actually started in 2010 when we started planting. At that stage, prices were very depressed. Maize prices were relatively low at 1,300 rands a ton. A lot of the irrigation farmers switched away from maize farming into vegetable farming, and we saw quite high volumes coming through in terms of cabbage and tomatoes and everything else. That depressed that price slightly. In the interim side, because the season was a little bit on the late side, people started worrying a little bit, but that's normal of a wet season. Then all of a sudden it started raining in the beginning of the season. Bumper crop was predicted, surpluses were predicted. Prices actually fell to below export parity prices, and a lot of maize actually, over 2 million tons actually got exported in the process. So what you see there was a little bit of a combination of things going sour for the agriculture sector, and then all of a sudden the international price picked up quite nicely, the exchange rate picked up, and we ended the season with high volumes, very good price in there, and that was reflected in good sales of tractors and combine harvesters. We actually hit a record this year.
Let's take a look at sustainability of these factors, though, and them coming to bear positively on the sector, because these are all very volatile factors that we're looking at. What kind of sustainability are we looking at from your view?
I think sustainability on currently is that there was a spike in prices, and because of the spike in prices, farmers did hedge quite a lot for next year already because for the future markets and the capability of that. So we expect that prices were basically hedged at almost 1,900 rands a ton. That's about 700 rands up from the previous season. So once again, a good season. The predictions in terms of weather-wise is also very, very favorable currently. We have got some good rains up to now. A little bit patchy in certain areas, but in general terms quite well. Taking this into the demand side, from the consumer side, also we find that the consumer was a little bit worried about the economic outlook, especially what's happening in Europe, and therefore she didn't spend that much money on durable goods, but she started spending on food, and we saw food inflation picking up quite nicely, and you see meat prices increase substantially. So all around, I think the season that's coming is going to be much better than the previous season. I think the volatility factors are going to be much lower, and this means just a little bit higher profitability for especially the bigger farmers. So
let's take a look at things, because with these factors counting in favor of markets, and as you say, this trend of rising profitability in the agricultural sector as a whole, to what extent are we seeing more people wanting to get back into the agricultural game?
This is exactly what's happening currently. Is we see a huge drive, and we see property prices increasing substantially due to that, in the vicinity of about 10 to 12% per annum. It just means that farmers are trying to enter the market again, or trying to become bigger throughout the process. We've seen bad debts from a banking perspective going down quite substantially. So investments in agriculture is picking up quite nicely. We're quite positive that in the long run, if you really take this over a cycle, we've actually saw a jump in commodity prices here from, I'd say, 2005 to 2010 roughly. There was a little bit of hiccup here in 2009 when the financial crisis hit us, but that rise was due to economic growth of more than 5%, and that means the consumer just had for more than 5 years so much more gold in her hand. She changed the eating patterns, and the Chinese started eating not just rice anymore, but rice and pork. And this created brand new markets for agriculture, and we expect prices to remain relatively strong. If you take it back 3 or 5 years ago, maize prices were running between $80 and $120 per ton. We're currently expecting it to be between $150 and $340 a ton. So we're in a total new world and arena.
Yeah.
Added to that, new technology that came along in terms of genetics, and we've got high production volumes. So you've actually got the best of both worlds currently in agriculture, and therefore agriculture is actually quite blooming currently.
And certainly those already in the game have got to be reaping added benefits, because you touched on very briefly the rising property prices within the agricultural sector, and that would lead to a decline in the debt to asset ratio of farmers, implying that they have a higher capacity to take on more debt if they needed to and reinvest back into the sector.
Absolutely right. That's what you've seen currently, is that the debt ratio to asset ratio, which was as high as 60% during the late 90s, actually came down to 35% now. And it means that they can actually take up a little bit more debt currently with some ease, although I don't think it's necessary for them. We're seeing them buying this year, like I said, a record year of new tractors and combine harvesters. And we as financiers are actually struggling to put finance into their hands, because they're putting down 60% deposits, and so we can't really finance and grow our book as we would like to in this industry.
Yeah. But at least the risk on your end a lot less.
Much less, and I think it's exuberantly nice to be in agriculture currently.
Let's take a look at technology, because you touched on that as well. How's that improving profitability? Because in the intro, I alluded to cost pressures and input cost pressures really coming to bear on these players over the past 3 to 5 years.
Look, if you really look at the cost pressure itself, there's only one way to beat the cost pressure, and that is to become more productive. And productivity actually means you've got to up your income versus your expenditure divided by a unit. Now, this can be hectares or head of cattle or whatever that you're measuring. But to up your income, you've only got two choices in principle, because a farmer is actually a price taker on the input side as well as on the offtake side. So he's got no control over the price itself. The price is actually determined by the market for him to a large extent. So the only thing that he actually can control is production volumes to some extent. And to do that, he has to mitigate two of the main risks. The one is the production risk side of it, and the other one, of course, is your price risk volatility, which is in there. Now, price volatility, that we can hedge off through future markets, all of those types of forward marketing, and that's how we can hedge that off. But in the production side of it, the only way to really do that is to grab at technology, and this is now new genetics that is drought resistant, new genetics that's disease resistant. Then you come to something like information technology that makes it feasible for you to implement precision farming, where you can actually apply a little bit more fertilizer in this area and a little bit less in the other area. So all of those play together. Added to that, the biological side that's now come to play because of the genetic side of it. And all of a sudden, we are actually going beyond what we call organic farming. We're now going to biological farming. We're putting bacteria back into the soils. We're doing no-till. Yeah. All of those things are the technologies that are driving up production volumes, plus the added value of price, and therefore a better profit currently.
Well, certainly a sector that we've got to keep an eye on moving into 2012. Thanks so much, Ernst, for your time this afternoon. Of course, Ernst Janovsky is head of AgriBusiness over at Absa.